The city's economy logs a solid 3.1% growth last quarter, while retail sales increased for a second month in June. Health experts warn of moderate to high risk of chikungunya fever reaching the city. And we'll take a look at how Mainland's rail operators innovate to push forward silver tourism. Good evening, you're watching Cable News, I'm Cheryl Yun. Hong Kong's economy weathered through the US-provoked tariff war, logging a better-than-expected growth in the second quarter, while growth in June's retail sales came in weaker than expected. Evelyn Bai has more details.
The advanced estimates on gross domestic product for the second quarter rose by 3.1%, up 0.1 percentage point from the first quarter, according to the Census and Statistics Department. One major economic component, private consumption expenditure, recovered, increasing 1.9% year-on-year. Meanwhile, the value of total retail sales in June, provisionally estimated at $30.1 billion, rose 0.7% year-on-year. Despite below market expectations of a 1.4% growth and down from May's 2.4% increase, retail sales has been rising for 2 straight months after dropping 14 months in a row. Sales of jewelry, watches and clothes rose 6.8%. Commodities in department stores were up 5.7%, while electrical appliances and durable goods declined 9.3%. The government contributed the uptake in GDP to strong exports performance and improved local demand. However, uncertainties in the external environment remain high, with unclear prospects for U.S. interest rate cuts expected to weigh on investment sentiment. On the retail sales front, the government said continued growth in employment income, a bullish stock market, and government efforts will boost retail sales. Evelyn Bai, Cable News.
Amid chikungunya fever making the rounds through Guangdong's Foshan city, with confirmed cases surpassing 6,000, Foshan authorities have launched a Level 3 emergency response to public health incidents, announcing that a 7-day campaign to eradicate adult mosquitoes will begin today throughout the city. In Hong Kong, the Center for Health Protection has warned that while the risk of the mosquito-borne disease reaching the city is moderate to high, it is unlikely to establish itself as endemic in the region. Evelyn Bai again reports.
Taking to the airwaves, Albert Au, head of the Center for Health Protection's Communicable Disease Branch, stated that Hong Kongers like heading to Guangdong very much, and that frequent travel between the two regions increases the risk of imported cases. The center's Port Health Division has stepped up publicity and education efforts regarding chikungunya fever at boundary control points, distributing leaflets to inbound travelers. This woman heading north said she has prepared anti-mosquito medications to combat the virus. This Hong Konger noted she has brought mosquito repellent sprays, coils and patches, and planned to wear a mask. District Councillor Christine Fong said the Food and Environmental Hygiene Department has strengthened mosquito elimination work, with the Gravid Trap Index for Aedes albopictus showing a significant decline in areas with high mosquito density. Currently, there is no rapid test cassette available specifically for chikungunya fever. Travelers with related symptoms such as muscle pain, nausea, and rashes are advised to be referred to hospitals for follow-up. The last recorded imported cases of the disease in the city occurred in 2019, totaling 11 cases. Since then, no further confirmed cases have been reported. Evelyn Bai, Cable News.
A Japanese sushi chain has halted the supply of 2 fresh fish products due to the tsunami yesterday, but industry experts believe the disruptions to be temporary. Sushiro, a renowned Japanese conveyor belt sushi chain, has suspended air cargo shipments of fresh yellowtail fillet and Red Sea bream until further notice. Industry experts attribute the suspension to a tsunami disrupting cargo and logistics operations. Chairman of Hong Kong Japanese Food and Cuisine Association Dennis Wu expressed surprise at the news, noting that the tsunami caused only minor one-day impacts in Japan. Hong Kong Federation of Restaurants and Related Trades Chief Executive Yuki Ma said the tsunami primarily affected fishing ports and fresh fish cargo, leading to disruptions or suspensions. Restaurants relying heavily on imported fresh fish will face the greatest impact, she added. The three-day Golden Age Expo and Summit kicked off today, highlighting the booming silver economy as the city braces for a growing elderly population. The expo unfolds against the backdrop of the government's increasing focus on the silver economy. Speaking at the opening ceremony, Deputy Chief Secretary for Administration Warner Chirk said 1/3 of Hong Kong's population will be elderly by 2034, driving demand for silver economy products and services. He emphasized that promoting the silver economy improves elderly residents' quality of life while fueling economic growth through emerging industries.
In terms of boosting silver consumption, the Commerce and Economic Development Bureau, in short CEDB, of our government has been working with the trade and stakeholders to attract more silver consumption through exhibitions and retail concessions, electronic commerce, and catering initiatives. Amongst various exhibitions, this signature exhibition is certainly one of the largest in Hong Kong, showcasing the latest smart aging technologies, innovative products and services from 200 exhibitors.
Chirk highlighted the silver economy's wide-ranging scope, from age-friendly designs to medical and tech innovations, urging joint support from the entire community. The event runs through August 2nd at the Hong Kong Convention and Exhibition Centre. Meanwhile, the tourism sector in Mainland is now also riding a historic wave fueled by silver-headed travelers whose spending and mobility powered a surge in the first half of 2025. Quinton Yang has the story.
The latest development came in late June when the Ministry of Transport unveiled 36 Golden Waterway tourism routes spanning 23 provinces. These scenic river and coastal journeys, linking cities, cultural sites, and natural wonders, offer seniors seamless all-in-one travel experiences. Rail innovations are equally transformative. Authorities launched 75 new silver-haired trains in the first half of the year alone, expanding China's dedicated senior fleet to over 360 trains nationwide. Popular routes stretch up to 9,000 kilometers, from frosty Harbin in Heilongjiang province to modern metropolitan Hong Kong, equipped with medical staff, emergency buttons, tailored menus, and spacious berths. Demand has been soaring. Hotel bookings by seniors surged 37% during May Day holidays, with Southern Beach Haven Sanya in Hainan Province, iCity Harbin in Heilongjiang, and Northwestern Gateway Urumqi in Xinjiang becoming top silver hotspots. Their spending tells the tale. Per-person outlays on culture, tours, and fun hit 1,499 yuan, rocketing 11.8% year-on-year. With 310 million Chinese now over 60, accounting for more than 21% of its population, similar as Hong Kong, the silver economy is tourism's fastest-growing engine, as rail operators plan over 2,500 annual senior trips by 2027. Quinton Yang, Cable News.
Major changes are shaking up America's trade with key partners this week as U.S. President Donald Trump unveiled a series of new tariff agreements with South Korea, India, and Brazil right before his Liberation Day tariffs take effect on Friday. Bess Leung reports.
Trump revealed on his social media platform that South Korea, America's sixth largest trading partner, has secured a last-minute deal to avoid crippling tariffs, with a new 15% tariff on its exports to the U.S., a major drop from the 25% threatened just weeks ago. South Korea-made autos can also enter the U.S. at a lowered levy of 15%. As part of the package, Seoul agreed to open their markets wider to U.S. cars, trucks, and farm goods, with no duties imposed on U.S. imports. However, South Korea clarified that they will not open up the rice and beef markets. Meanwhile, Trump said South Korea has committed to spending $100 billion on American energy products and investing $350 billion in U.S.-controlled projects, including a $150 billion capital injection into a joint fund for vessel building, plus $200 billion on the U.S. semiconductor sector. Trump also announced a 25% reciprocal tariff on Indian goods. He said that while the two countries are friends, he criticized India's tariffs as too high and accused India of buying Russian energy and military equipment, which he said fueled the Russia-Ukraine conflict. As a result, punitive measures will be implemented against India without specifying details. While India reiterated its commitment to reach a fair deal with the U.S., Trump hinted there's still room for negotiation.
Tariff is so high. They have one of the highest tariffs in the world. Now they're willing to cut it very substantially, but we'll see what happens. We're talking to India now.
Separately, Trump also signed several executive orders, including slapping a 50% retaliatory tariff on Brazilian goods starting the 6th of next month, whereas civilian aircraft, energy products, orange juice, among other items, will be exempt. In addition, a 50% tariff will be imposed on all imported semi-finished copper products starting tomorrow. Bess Leung, Cable News.
Shares in Hong Kong retreated for a third day, sending the benchmark index back below the 25,000 mark. The Hang Seng Index ended the day down 403 points. Top active stocks of the day, Tracker Fund was down 40 cents, Meituan was down $5.80. Tencent was up $1, Xiaomi was down $1.60. The U.S. Federal Reserve kept its interest rates unchanged, offering no clear signal on a September cut, as Chairman Jerome Powell maintains a watchful stance amid sharp criticism from U.S. President Donald Trump. The widely anticipated decision maintained the federal funds rate target range at 4.25% to 4.5%. However, 2 of the 12 voting members of the Federal Open Market Committee dissented, advocating for a 25 basis point rate cut, the first time in over 30 years that 2 Fed policymakers have opposed the majority. The decision came amid heated debate over the economic impact of Trump's proposed tariffs. Federal Reserve Chair Jerome Powell defended the hold, stating it was too early to assess the full effects of tariffs on prices. He also gave no hints for a rate cut at the September meeting, emphasizing the need for caution.
Changes to government policies continue to evolve, and their effects on the economy remain uncertain. Higher tariffs have begun to show through more clearly to prices of some goods, but their overall effects on economic activity and inflation remain to be seen. A reasonable base case is that the effects on inflation could be short-lived, reflecting a one-time shift in the price level. But it is also possible that the inflationary effects could instead be more persistent, and that is a risk to be assessed and managed.
Powell reaffirmed the FOMC's commitment to supporting maximum employment and achieving the 2% inflation target. The next policy meeting is scheduled for September 16th to 17th. Nicknaming Powell too late, Trump, who previously called the second quarter economic growth of 3% much stronger than expected, has long been urging Powell to cut rates. On to the weather now, mainly cloudy with a few showers and thunderstorms. More showers at first tomorrow, bright periods during the day. Temperatures will range between 28 and 32 degrees. That's our news tonight. I'm Cheryl Yun. Thanks for watching and good night.